For us, we're not sort of seeing major trade-offs from a performance perspective if it's done at a medium level of greenness. Certainly, if you're going to a really, really deep green, what you tend to find is probably the volatility starts to increase in a portfolio. And so you do see your growth exposures move around a little bit more.
Hello, and welcome to The Greener Way. I'm your host, Michelle Baltazar, Executive Director of Media here at FS Sustainability. As Australia grapples with fuel shortages and energy insecurity, it's not just supply chains under pressure, it's investor convictions. Rising costs and external shocks have a way of forcing uncomfortable questions. How are investors looking at their sustainability preferences when conditions change? Joining me today is Alex Jameison, financial advisor and founder of Jamieson Private Wealth, who works with investors across that full spectrum, helping translate values, risk, and reality into investment portfolios. Alex, thank you for joining us.
Thanks so much. It's great to be here.
So when clients come to you with different views on sustainability, from deeply values-driven to outright skeptical or ESG agnostic, where do you start the conversation?
I think it's getting an understanding on their value set. So we use the word or the acronym ESG, environment, social, governance. And depending on where you sort of sit in that bracket, that's where sort of the starting of the conversation, are there areas in the market that you're happy to invest in? Say mining's obviously a bit of a hot button one, or defense or tobacco. And it's getting really clear around what's important and what you're trying to exclude, what you're trying to include.
And how do you explain the differences, say, for someone who does worry about ESG concerns and risks, but also very mindful of their returns?
Yeah, we talk about that, the level of greenness in the portfolio. So if you're a very deep green investor, you'll have a very heavy screen and a very strong sort of view around, what you're comfortable having in as investment options and what you won't. And then, as you mentioned, there's the trade-off. So if we look in more recent times, materials, which has been mining companies, have done really well. And if you didn't have exposure to, say, oil and gas with the Iran situation, that certainly has a trade-off from a performance perspective. And it's sort of understanding what those trade-offs might look like and how you sort of view that, and how do you tackle it as well in terms of the longer term sort of wealth creation strategies.
And history is always great at teaching us really valuable lessons. So say, for example, who's been a deep green investor for more than 10 years, for example, so you've got the full economic cycle. Do they find that that strengthens their convictions, or does that kind of rattle them and now they're starting to reconsider, my goodness, the materials sector has outperformed. Maybe I should really reevaluate?
Yeah, I think intellectually you're sort of trying to still achieve the same outcomes from a return performance perspective. So if we take the oil scenario, like renewables have been really strong. And, everyone sort of now buying electric cars at the moment because, they're worried about fuel supply and all the rest. And so there are trade-offs with, in terms of the events, and it's trying to think through those sort of complexities, how to sort of grapple and what are the alternatives and having the conversation. So it's not completely binary in that it's 0-1, you lose or you win in that regards. But I think certainly in these sort of events that you see globally, if there's sort of a question that raised around, well, why is the ASX up, but my portfolio may not be particularly strong as the ASX, that's where, being able to clearly articulate, okay, this is the reason you don't have exposure to this particular asset class, which is largely provided the returns for the year. And so, yeah, it intellectually, it helps that conversation through some of those periods where there might be some differences occurring in performance. And the pendulum swings both ways as well too. There's periods where the ESGs have significantly outperformed because they're the sectors that they tend to have exposure to are more growth-orientated sort of companies, whereas the traditional investor has more equal weighting.
And again, of course, it's hard to provide specific answers on who's outperformed over who from your deep green clients to your non-deep green clients. But overall, what are your observations? Do they kind of just balance off in returns over the long term?
Yeah, I see it very much like that. What's better, property or shares sort of conversation. And it's just like, well, what conversation, when you're having the conversation in what part of the cycle? It just depends when you're having that conversation. For us, we're not sort of seeing major trade offs from a performance perspective if it's done at a medium level of greenness. Certainly, if you're going to a really, really deep green, what you tend to find is probably the volatility starts to increase in a portfolio. And so you do see your growth exposures move around a little bit more because the areas of concentration aren't quite as diversified. You also have to have a pretty global mind as well. Like we sort of think about a lot of the innovation in those spaces, like the things that do come to mind when you're thinking about those opportunities. Europe is a big player in that space. And so, yeah, you do have to have a more of an international mindset. There is opportunities in the Australian marketplace, but they are a little bit smaller in size. And yeah, so that's another important consideration too.
And how big is the universe for deep green investors?
It certainly, like I think the younger generation, they just expect it. A lot of the conversations that we have with that generation, they're new to investing, and from their perspective, it's like, well, I just wouldn't expect those things would be in my portfolio to start with. So, someone sitting in a typical super fund with an industry fund in a balanced investment option, I think if they possibly got a little bit more understanding of what they're holding, they'd be a little bit shocked to some degree. Now, tobacco's been great from a performance perspective in the last year, but some people might have some fairly mixed views around, whether they want that in the portfolio. And the other thing we're sort of seeing is, it started with this idea around ESG, which a mining company could be. Northern Star as an example. ESG ranks really well, but it's a mining company, and some people aren't really happy with that. And so the language we're finding is also changing. We saw ASIC step into this greenwashing idea around, are you really true to label? Are you looking to do, responsible investment, impact investing, ESG investing? And then the universe is expanding in size as well too from what it was maybe 10, 15 years ago. And what are you trying to achieve as well with the portfolio?
And in terms of your role as a financial advisor, do you think you can provide them more education around sustainability? Or is it merely, as you've rightly pointed out earlier, listening to them first to help them get a portfolio that really reflects what they want?
Yeah, I think it's really changed substantially over the last 10 years. Like there has been such an interest in this space and it has grown. And so the investment options that are now available, just off the shelf are really significant both locally and globally now. So most of the major ETF providers have ESG investment options and multi ESG investment options as well, and a really full suite as well. So the ability to do it is a lot easier now if you're trying to get started in that space and really want to think about it. And industry funds and retail funds are also offering the typical sort of ESG investment options as well too. So getting started is a lot easier. You're not having to custom build a direct portfolio with that purity that we had to do, 10, 15 years ago, where it's like, okay, here's your value set, and then start screening out. And it was all sort of custom building portfolios to really get the purity right. Now, off the shelf, you can really get those solutions. But I think, yeah, that getting clarity around, okay, what are you trying to achieve here? As I said, the spectrum ranges from, do no harm right through to I want to make a difference, which is impact investing. It's quite wide now. So it's getting clearer where you sit on that spectrum. And then from there, it's getting clear on what's the value set. Like we have clients that aren't happy with alcohol, for example, but for most ESG screens, that would be perfectly fine. So it's getting clear around the nuances around it and whether it's important or not. And then obviously building the portfolio out from there. So the conversations and the checking in and understanding, what's possible, what's not possible is, I guess, primarily what we spend time around.
And finally, you mentioned earlier that younger investors just expect to have that choice to them, whether they want to be deep green or medium green. But in terms of investors coming to you this year with what's happening in the Middle East. Are there any trends in terms of the kind of portfolio they want?
Yeah, it's really odd. We saw a bit of data that came out. Trump's first term, renewables did insanely well, and we're a bit shocked because he's, drill baby drill was his catch cry, particularly coming into this election. So we were curious around that idea, and again, yeah, as I said, solar's been pretty, and renewables have been pretty solid for the year. That's been, I think that potentially, with oil shortages and all the stuff going on around Iran, it's interesting sort of seeing how the political dynamics where you do see, a president that is in a particular sort of way vocalizing it, and yet markets respond very differently. I think, yeah, certainly from the trepidation was mostly around, well, if they are leaning more towards those traditional sort of fuel sources from Trump, does that mean renewables are not going to perform well, was sort of the initial concerns. And then when we sort of presented some of those key findings, that certainly put a lot of their minds at ease that were focused in that space. So, yeah, from that side of things, it was more trepidation and how to navigate some of those events, particularly as geopolitical sort of risk is becoming a much bigger forefront with investors' minds.
Well, as they say, the facts don't lie. So it's great to see that the insights and the data reflect that there's definitely cause for renewables despite what's happening at present. Alex, thank you so much for helping us unpack such a very broad but very important concept, deep green investing and what it means for Australian investors.
Thanks so much. Great to be here.
And that's The Greener Way. I'm your host, Michelle Baltazar. Thank you for listening.
The Greener Way podcast is a product of FS Sustainability. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, legal, or tax advice. Before making any financial decisions, you should read the product disclosure statement, and if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.